some respondents wanted there to be a strong emphasis on continuous improvement and innovation, so that can be added. We did detect that there are some misconceptions and fears out there among the public in respect of smart metering. For example, some people are afraid that their data might not be safe, or that government's seeking to exert control over individuals or control over an individual's energy use. That could be further from the truth of the aim of what we're doing, but what it does show is the vital importance of education, communication, transparent messages and transparency, and that will be a very large part of our plan moving forward. The oversight group, which we're proposing to set up, we will form that with the utility regulator in partnership with the utility regulator, and that oversight group will then be able to engage with specific organisations at specific times when the organisations in question will be of the most use as we move forward. We were very particularly pleased at the appetite among the energy industry, those in the energy industry, to become involved, and also those representing consumers and advice-giving bodies, particularly those representing vulnerable consumers who wish to be involved and contribute in the process. Having input from consumer representatives as we develop the technical specifications for procurement will help us to make sure that the technology that we get in is what consumers want and consumers need, and that'll be vitally important as we move forward. There were some mixed views from those that responded to the consultation about the potential benefits of new flexible tariffs. Some people sought comfort that their old traditional fixed tariff would still be available to them if they so wanted. And consumers also wanted to be assured that their personal data would be safe and protected, and that they would be able to give consent to, for example, advice-giving bodies or someone that would be giving them advice on to help them as they move forward. We understand that consumers and businesses will all have different needs, and those will all be taken forward and put into the rollout plan, and that will be essential in order to make it successful. We welcome the opportunity to take on board the views of the committee as we develop the final design plan, and the design plan will deal with really, really important areas such as roles and responsibilities, consumer protection, education, data privacy, cyber security, just generally who's going to do what and who's going to be responsible for what. When we publish the design plan, there will be a full chapter which will analyse the consultation responses, and we're very, very happy to take any questions that you might have.
Thank you as always, Sarah. If I just start, has the department then taken a decision, Sarah, in relation to how they will roll out this policy in terms of the 4 options that were included within the initial report?
What we've decided is that the proposed decision is that NIE will be in charge of procurement, and NIE will do that. And what we'll do is we'll form an oversight group with the utility regulator, and then once NIE are further down the way in terms of coming up with the procurement plan, then the procurement plan can fit with the rollout, and we can plan the rollout in terms of what works with that procurement plan with NIE. So we'll do that as part of the process.
You know, the policy decision has been made at this stage in terms of mandatory rollout, opt-in?
Not at this stage, no.
No problem. And then in terms of costings then, has there been an initial costing done for the overall project?
In terms of the cost-benefit analysis, Maeve will just give you a wee rundown of the numbers.
Yeah, so as you mentioned, KPMG took that work forward in 2022, and then in 2023 we published the cost-benefit analysis, which allowed us to take forward our plans and come up with the questions for the consultation. But when we looked at that, we had 3 different scenarios. One was to have a fast rollout. It was just to go in and replace all meters over a 6-year period. The second was to wait until meters came to the end of their life and replace them as and when needed, is what we do at the moment. And scenario 3 was a bit of a mixture. It was wait until the end of life for some of the meters, and then to take 2 different council areas which were just taken in terms of their population, and have an area there where we roll out quickly and have the 2 things in tandem. So all of the 3 scenarios were all positive, so we knew that taking forward an electricity rollout was the right thing to do. The benefits for the scenario 1, which we're likely going to propose over a 6-year period rollout, The costs were 527 million with benefits of 827 million.
And that 527 million, that will be paid obviously by customers. And do we know then what the average impact will be on customers' bills on a yearly basis?
What's important to note is, though, that there, in addition to the cost to consumers, there's also the benefit to the consumers.
Yeah.
And what's important about this is that it's a net positive MPV, and that the benefits do actually outweigh the costs. Because at the minute, consumers already pay for meters, and they already pay to replace meters. But by going for smart meters, the benefits outweigh the costs. So in fact, it'll be saving customers money.
Do we have like a payback period in terms of how customers...
Meters will be costed in the same way that they are now and come through the price control, so there'll just be another line on the price control as they are now. So there'll be no difference, and consumers, you know, when we talk to them through focus groups and they're looking for more information, some are confused and thinking, will I see a line on my bill? That's not particularly what they're going to say. It'll just be the same way that we bill at the moment.
And they'll see no additional cost then?
Obviously, through the price control process, that needs to be worked through the price control process, but the benefits should outweigh the costs. The benefits, according to all the studies, will outweigh the costs.
Perfect. Sinead.
Thank you very much for that. Sarah, you spoke about the misconceptions and fears that are out there, and your desire to have transparency as key to the plans and the rollout. Can you elaborate a wee bit more just how you're going to tackle those, you know, dealing with the misconceptions and the fears of the public?
Well, our proposal in the consultation is that there would be a consumer protection working group, and that consumer protection working group would be chaired by the Consumer Council, and the Consumer Council has a statutory role to protect consumers. We know that they're a trusted voice. When we did our focus groups, our one-to-ones, and our one-to-ones, and when we were speaking to, for example, we spoke to the Fuel Poverty Advisory Group, and there seems to be support and trust in the Consumer Council and having that role and that voice, so they can ensure that obviously everybody will have a role in messaging and speaking to consumers, the department, the utility regulator, Consumer Council, NIE, suppliers, but having the Consumer Council there in that role as chair and having all their links that they have into the advice-giving bodies should ensure that the messages that get out there are accurate and true and people are able to benefit. And then hopefully, if we get this right, which we intend to, once meters start to go into people's houses, then word of mouth will take off and people will see the benefit. So that should hopefully help as well.
And it's also indicated in the papers that there be specific protocols around vulnerable customers. Can you elaborate a wee bit more on just
currently there are a number of codes of practice within supply licences which are overseen by the utility regulator, and there are also codes of practice within NIE's licence, and those codes of practice cover various things such as debt, such as dealing with consumers who are having difficulty paying their bills, vulnerable consumers, etc. And what we would intend, those codes of practice will continue to be the means by which we protect consumers. Now, as we move forward, the utility regulator will be able to work with the Consumer Protection Group and be able to review those codes as and when they need to. But those codes will be key to ensuring that consumers are protected.
And are you content that the utility regulator will have the vires, etc., to undertake this work?
We are content. The utility regulator's primary duty is to protect consumers, and they already have a role in respect of meters and overseeing meters. The utility regulator already has a role there.
There's no gaps at all.
NIE already. Well, now there may be small gaps as we move forward. You know, small gaps here and there, which we haven't yet identified. And if we do identify them and we do come across them, and we need to make changes to legislation to fill those gaps, we'll do that. But at the minute, we're at the stage we're at now, we're content. We've been working with the utility regulator to date, and we've been working with the Consumer Council, and we think we can move forward with what we've got currently. At the stage we're at now.
Thank you.
Thank you, Sinead. Gary.
Thanks, Chair, and thanks to you all for the presentation. Just a couple of questions from me. The actual consultation itself, it ran for 10 weeks. It had closed, and then you'd said, due to consumer demand for more time, that it obviously reopened again. So can you talk us through as to, when you say consumer demand, what exactly do you mean? Obviously there was a 10-week period for people to respond. Could you talk through why you took that decision?
We got a number of responses from citizen space, from individuals and citizens who said they'd only just seen it, and because of that we decided to give them some extra time. Just wanted to be as transparent as possible.
I know it's interesting because obviously there's other consultations, no doubt, that people would look at and say, well, we need more time for that as well. And just obviously there's a precedent there, but people do have genuine concerns, I think, around one of the issues that's mentioned a lot is around data, the use of that, how it will be used and managed going forward. You've mentioned in the papers that you'd met with the Information Commissioner's Office. Could you maybe tell us a bit about their feedback and whether or not you plan to consult further or continue consulting with cyber security experts, people who would know as to the security of data, just to give that confidence, I suppose, to people who are just concerned. And rightly, I can understand why people are concerned about this, notwithstanding, of course, the benefits, as you say, of bringing in smart metering.
Absolutely, we will continue to engage with the Information Commissioner's Office as and when we need to, and the proposal is to have a specific data group which will specifically look at data protection issues. In terms of data, in one sense, some things don't change in that the data will still be collected by NIE, used by NIE to run the network, etc. The data will still be given to suppliers who will use that data to bill customers and do all the things that suppliers do when they're dealing with their individual customers. The data will belong to the customer, it's their personal data. So that aspect of it won't change, but what will change in the future is the quality of the data. The fact that the data will be half-hourly, that NIE can use it to plan much more effectively, to identify faults much more easily, to identify exactly what's happening out there in their network, to integrate renewables much more easily. Suppliers will have much more accurate data, no more estimated, no more shock if you've had an estimated bill and then you get a real bill. Yeah. So that'll be a real benefit for consumers. Cybersecurity will continue to be really, really important, and continued engagement with the Information Commissioner's Office at every step will be important because consumers are concerned and worried, and it is our job as we roll out to allay those fears and to make sure we do that properly, hence the data group which we're proposing.
And the data group, is that separate from the oversight group?
Yeah, we're proposing that the oversight group will essentially be ourselves and the utility regulator overseeing the entire process. NIE, we're proposing, will be the implementation body that procures the technology, actually does the rollout, gets the people in vans on the ground actually doing it and bringing forward the concrete plans and spending the money. And then there will be other groups which will sit alongside and report to the oversight group, so the Consumer Protection Group and the Data Group, for example. And the Consumer Protection Group, obviously, as I've said, will be chaired by the Consumer Council.
Thank you.
Kate?
Well, thank you. Sorry, I'm not used to being online, so I don't know how to use it. Thank you so much for the presentation. I think it's really interesting, and I wanted to pick up actually on the misinformation and how that's kind of fueled some of the negative responses. And following on from what Gary said, I think it's good to have the separate groups, but I would worry that these things really grow legs, and the department needs to take a really proactive role in speaking about the benefits that smart metering has, especially in meeting our climate change and renewable energy targets. So I'm just concerned that maybe this piece of work is being outsourced to the Consumer Council, and I wonder how much of an active role the department's going to be having in tackling and challenging that misinformation, so that it is a success. So if you could alleviate some concerns on that, that would be helpful.
I wouldn't say outsource as such. I would say I would be more likely to characterise it as work in partnership with, but allow the Consumer Council, that is their statutory role to speak for consumers. They are trusted. Their probably slightly more trusted than the department, but in terms of the messaging, in terms of the accurate information, in terms of what we're saying, of course, the department will be taking a lead role, and we'll be working in partnership with the Consumer Council, the utility regulator, and all the energy companies, and certainly those links into those trusted organisations, such as the advice-giving bodies, the bodies who represent specific groups, be it those with disabilities, older people, etc. The fact that the Consumer Council has direct links and is trusted by them, in the sense, probably, they were set up specifically to protect consumers, and that to be their sole focus. Whereas the department, we also have a duty to protect consumers, of course we do, but we also have a range of other duties, and but having them with that specific role, working with us, working in partnership with us, we think is essential, and also with the utility regulator as well, in their role to protect consumers.
Okay, thank you. I think I'm just trying to kind of emphasize the importance of the department having a specific comms plan in relation to it, but as you say, it's partnerships, so assuming you'll be doing that. Just in terms, the only other question I have is just in terms of the lessons that have been taken in terms of the rollout of smart metering in GB in the South, if you could speak a bit to what the key lessons and learnings the department has taken from that.
One of the key lessons was in fact in relation to messaging, because we did notice that elsewhere the messaging was got very much wrong, which led to opposition, which did set things back a bit. Another lesson we learned, now the two rollouts in the two different areas were very different. One was a supplier-led rollout. In Britain there was more of a supplier-led rollout with the supplier owning the meters, and that caused some problems. And then in the South it was more to do with the network company owning the meters. We have gone with the network company owning and rolling out the meters because of the scale of Northern Ireland and the number of customers we have. It's much more efficient. There's no, you would lose a lot of efficiency in procurement if you had lots of different suppliers running around procuring different meters. So that was a lesson learned, and we went for that. There was the communications lesson. There was a very much a lesson learned in terms of having your data protection in place in advance of, while you're procuring, not as opposed to don't procure the technology and then put your data protection in place. Put your data protection in place so that you know what. So that was a lesson learned. So we learned positive lessons, and that we can feed in to get this right. So hopefully. That's one of the good things of going second to other people. You learn from what they've done.
Thank you.
Thanks, Kate. David?
Thank you. Just to follow on, I sort of, second, we're last in all of the areas, so it's hard to understand sometimes why we get conspiracy theories whenever everybody else is actually already there. It's, I suppose, Kate brought there, that messaging, just that positivity. Coming around is really important. I suppose what's been in you've covered quite a bit of so far, but what's been a big thing for consumers, I suppose, recently has been the outage after the storm, and the cost of that. Last week we were told half of it's going to be met by the consumer again. So the cost of this again, there'll be the cynics would be thinking the cost of this will be another part, and I understand you're saying there's a saving, but what are the benefits for another storm? So if there's a storm, what are the benefits to the consumer?
Well, the benefits to the consumer are twofold. Some of the benefits to the consumer come by virtue of the fact that it'll make NIE much better at operating the network. NIE will have much more accurate information as to exactly what's going on the network. They'll be able to plan better, they'll be able to integrate renewables better, they will be able to identify faults much more easily and accurately, because the data that NIE will have will be much more accurate, and consumers will benefit from all of that, those efficiencies in that planning, and all consumers will benefit. And then there's the benefit to the individual consumer whenever they get their smart meter in their home, and this is very much about putting information into the hands of the consumer themselves, so the consumer can make informed choices, so that they can help themselves, so they can use their own data to make their choices for themselves and make informed choices. I mentioned previously, no more estimated bill. Consumers being able to pick up a device and look at it and know exactly what's using power in their home, and where they're incurring costs, what's doing what in their home. Much more accurate information to help them if they want to switch to a new supplier and get a better tariff. Much more accurate information in terms of what tariffs they should be on. Much more accurate information, to save them money. Much more accurate information for them in terms of how they can save energy, which will then individuals being able to make their own choices and their own decisions about how to save energy, to save money, to save carbon. So all of those savings together, will very much help everyone benefit.
Absolutely. It's real.
I'm trying hard not to sound too enthusiastic.
You need to be enthusiastic. I think that's
Yeah.
part of the thing is this: somebody's selling something that's of benefit to somebody, but then you sort of rule out the conspiracy. So we're talking about people that have Alexas in their houses listening to everything, and then we're talking about an electric meter that tells you. So it's hard to compute.
And this is about giving you your own information, so that you can make your own choices, and the individual consumer, can be in control.
Yeah, I suppose the bit I was going to, we hear a lot about renewables and the dispatch down been an issue, and sort of waste of renewable energy that isn't able to the grid, the capacity isn't there. How does a normal punter living wherever, Lisburn or Derry or Fermanagh, how does that benefit them? How does that work?
As we move forward in time, now I don't want to oversell, because things will happen, in their time, and to make sure we get this right and make sure we roll out this thing right. Then once the suppliers have the data, for their own customers, for their billing, they will be able to look at that, and they will be able to bring forward new types of tariff offering. And the new types of tariff offering, what we've seen elsewhere in the different types of tariff offering that are available. Other times in the tariff offering where there's lots and lots of wind in the system, where the tariff offering can come down low and people can use up that wind, and so electricity's cheap at the minute. I can charge my electric car, I can put on my heat pump, I can do whatever.
So that's live information.
That'll be live information,
okay.
So the customer can go, electricity is really cheap at the minute because there's lots of wind. I'll plug in my electric car. I'll take these decisions to do that, take advantage of that, which helps us obviously with the system and helps the consumer as well.
Yeah. Okay. Last one just for me. Why are we not, in every new connection that's going out now, why are we not putting in the meter now without it being smarted, if you like? Or
yeah. I see where you're coming from.
Why don't we have it ready?
Yeah, I see where you're coming from, because we're working with NIE on this, because what this is there's two aspects of it. One's the hardware aspect, the actual meter that goes into your house.
That's a bit of me. But
the other aspect of it is that this is actually essentially the biggest part of it's an IT process, and the back end systems and the computer systems, and that'll deal with all this data, and it's really important to allow NIE to design and
I understand the smart bit, but what I'm saying is, why, if we're putting the meter in and the smart meter, you don't switch on the part of it that is the new technology, it's just an ordinary meter. We're retrofitting what's just been fitted this week, next week, very quickly. Why do we not just switch to this as what goes in as a default, but not smart?
I might just say, that we still need to go through this procurement process, and we talked about the various consumer groups being involved in that and making sure that we meet their needs. So we want to make sure that at the outset we procure the right system, and the hardware is very, very important. It's integral to the data side.
It's about making sure that, I mean, this consultation was about giving NIE the role in procurement, and then it'll be about what they procure and making sure that it all fits together.
Thank you, David. Padraig?
Thanks, Chair, and thanks for your presentation so far. Look, you've already answered a few of the questions that I had, but really I wanted to get into a few specific topics. One of the things for me was, I think it's great idea and works really well for a lot of people. I'm quite worried about people who are furthest from technology. So, for instance, people who are not so technologically savvy. I'm thinking particularly of older people, maybe people who live on their own, those who already struggle to pay their electricity bills. And I'm just thinking that those who are kind of furthest from the technological advancements which we all see, how are they going to be supported?
That is a really, really good question, and it was really important to us. And we did emphasise that in the consultation, how important it would be to take into consideration the needs of the vulnerable, all vulnerable consumers, be it vulnerability due to age or whatever reason. And what we're very heartened by, in terms of the responses that we received, was the number of responses we got from groups who represented vulnerable people, such as older people, or such as maybe disabled people, and even by virtue of the fact that we got a response in saying that this is a real opportunity to make the interface for the consumer less confusing and more user-friendly and easier for those groups, especially if you get them in right at the start as you're procuring. So this is a real opportunity to make life easier for vulnerable people and help them. And that would be our intention as we move forward. And that's sort of why we keep going back and emphasising the role of the Consumer Council, the advice-giving bodies, the consumer bodies, to be really in there right from the very start to make sure that is the way we do it, and that it will actually make things easier and better for vulnerable people.
No, I totally agree in terms of the opportunity and the opportunity it presents. And I think that needs to be inbuilt from the start, to say that rather than it just being like an advice piece that those organisations should support people, that it's compulsory that they do, because otherwise people are going to be left behind. And I'm thinking even in that as well, like we would be dealing, as I'm sure other people here in the room are as well, with constituents every day who are topping up their card, who are spending very, very few or very little in terms of their electric and so on. People who are maybe living week to week in terms of their finances. How does it work for those people? Do you think that the impact will be the same? Do you think that they'll kind of receive less of a benefit? I suppose what I'm touching at really is, while there are huge opportunities on this, and I totally appreciate that, my worry is that it could actually widen the gap between those who have and those who don't.
Some of the responses we received from the organisations representing vulnerable consumers talked about self-disconnection among those consumers who are currently on prepayment cards and currently on top of, and specifically talked about the lack of the ability to have really accurate information about who's self-disconnecting, and pointed out that smart metering is a potential opportunity to have much more accurate data about the potential for people to self-disconnect, which could then be used as an opportunity to help people. So again, having the better data helps us to help people, and that would be our intention, to attempt to do this in such a way that the consumer is at the heart of it, and we're doing it to help people.
No, I know, and I suppose it's a difficult one to balance. Where how does the support work? Because I suppose while that might be the intention, I would just worry that people who are living week to week and not having that finance, that they mightn't even have access to the technology to kind of have access to that and actually be able to get the breakdown, and that would be where I would really worry that the people would be kind of pushed further out. But I appreciate that. I think in terms of what you're doing to support people who don't have access to that technology, it's really good that a proactive approach is being taken to that. But I think just those conversations need to be, I suppose, ongoing, and I appreciate you're already doing a lot of work on that as well. And one of the other, and it's just again practical sort of question on it. One of the big issues that we see as border constituency is around rollout and the signal and the connectivity that people have. Would you have any worries, or I suppose has there been any engagement to ensure that if we're reliant on signal, on Wi-Fi and so on, that communities, I'm thinking of rural communities like my own border communities, that might actually have an unreliable signal and so on. How would that connection be ensured?
Again, that's a really good question, and what we would be seeking to do is, as NIE procure and design the actual system, that they're cognizant of that and they design in to the procurement process a way to deal with that, so that is something that we're very cognizant of and will be very important in the procurement process going forward.
No, thanks for that. I suppose, look, the main point for me is access for this for everybody. Really appreciate that you're doing a lot of work on it, but for me it is looking at groups who mightn't have access, looking at groups who are topping up week to week, who don't have access to this technology, just ensuring that they're supported so that they can actually get that information, which is really useful if you can get it, but if you can't get it, it obviously isn't. So it's just making sure that they're at the forefront of policy development on this, and appreciate that as the intent. So thanks for that.
Yeah, that's a really, really good point, and it's going to be so important as we move forward to do that and really put consumers at the centre, and all consumers, you know.
Thank you. Diana?
Thank you, Chair, and thank you very much for the presentation. It's we're moving to new systems, and that takes change management. People, adapt and have to adapt to new processes. And you talked about, Sarah, the incentives for consumers. How do you see the incentives for dairy farmers? I'm thinking there's over, I think, 3,500 dairy farmers in Northern Ireland, and the cattle don't milk in off-peak periods, they don't observe that. So what incentive can you give to them to switch over?
We have had specific engagement with the Ulster Farmers Union, who raised that exact point, and sought assurances that for customers, and it might not be dairy farmers, it might be other customers as well, who don't have the ability to, get the best flexible tariff and move their usage around, and they sought assurances that there would be protections put in place as we move forward to make sure that the more fixed rate tariffs would continue to be available, and it'll be our job to put those protections in place as we move forward and provide those reassurances. So among those groups, when we were engaging with the Ulster Farmers Union, they raised that point about the dairy farms and seeking to ensure that protections were in place, and they also raised points about the opportunities for the farming community, as the farming community might move to adopt more renewables technology, more low carbon technologies as well. So there's the you could look at it as pluses and minuses, or you can look at it as pluses and pluses, provided you have the correct protections in place, and that's what we've got to do as we move forward.
And just then talking about implementation, and it's a massive project, 920,000 consumers. What thinking has the department given to the training needed for the engineers? Because obviously, there's going to be a suite of recruitment of skilled engineers, and how does that filter through to what the further and higher education colleges are doing?
We are working with NIE on that, and we do have the department does have a skills group, which is looking to ensure that as we move forward across the entire net zero transition, that those skills are available, and we are working with further education colleges, and our skills group within the department are looking at that.
And is that something that can be even fed into existing schools as potential future careers, that's in the pipeline, that information is given?
That's something that we'd be working with NIE on to make sure that we do that properly.
Thank you.
Thank you, Hannah. Jonathan.
Thank you, Chair. Thank you very much. Likewise, a similar vein, on listening to the consumer benefits that you listed, it sounds quite exciting. That being said, not one size will fit all, particularly when we look at, as Dan has mentioned, the rural community in particular and other sectors. There needs to be appropriate protections built in and flexibilities to ensure that they're still viable. So I'm glad to hear that that's something that's going to be central to your thinking going forward on this. Kate had mentioned earlier about lessons learned through the report with the GB rollout and the Republic of Ireland rollout. So just for clarity, what system approach did they opt? So in GB, was it an opt-out
In GB, they had a supplier-led approach.
Okay, yeah.
Where the supplier was responsible for purchasing and installing the meter, and they have moved to a compulsory approach.
Okay. And was there still an opt-out availability in GB?
They are moving forward now to look at whether or not they are seeking to ensure that all consumers have one.
Okay.
And we would seek to go for a 100% rollout, but we would seek to do that because people will want them, as opposed to, you know, we're not at this point in time looking to force anybody to take anything. We're looking to do this such that, you know, we'll get to 100% because people will want them.
And what happened in the Republic of Ireland? What was their approach?
The meter went in and it could be moved from either a smart mode to non-smart mode.
Okay, so the Delta report suggested an opt-out, an active approach for smart meter rollout in Northern Ireland. That is something that you would be intending to follow in terms of what has been suggested?
The final decisions haven't been made yet.
Mindful
but we're mindful of the fact that was a recommendation, and as we move forward, we would seek to, you know, in terms of the specific rollout approach hasn't been landed on yet.
Yeah.
But we are saying that our aim is that we would eventually get to 100%.
Yeah.
But in the first instance, we want people to want them.
Yeah. Well, I would like to think that as the system proves reliable and trustworthy, that may be the case. But we have to be mindful that we are not at that stage yet, and there is people that have legitimate concerns. So with that in mind, the opt-out approach, in which the report is suggesting we adopt in some way combined with active. So the model, so an opt-out approach, the model involves the installation of smart meters in consumer homes premises by default unless consumers actively choose to opt out. So how is that message communicated with consumers? Because I have seen before where this type of language is used, and in a sense, perhaps the consumer doesn't realise their right to opt out, and it progresses without them being made aware. How would that particular part of an opt-out approach take place in Northern Ireland?
A final decision hasn't been taken on whether or not we'll have an opt-out approach or a compulsory approach or a mandatory approach, so we haven't actually taken that decision yet.
There's been no exploration as to what this approach would look like.
What we've been focusing on at this point in time is the approach where we would want people to want them. We don't have any plans for mandatory or force fitting. You know, that we're absolutely not at that stage where we're getting there yet. And what we are very mindful of, though, is that there will come a point at some point in the future where, you know, on the market, the only type of meter you'll be able to buy will be a smart meter, because, as I say, the rest of the world has moved forward. So there will come a point naturally at some point in the future, but we're not there yet. We're still at the design phase, so, you know, I don't think there's any need for anybody to be worrying at this stage.
You keep mentioning, obviously, the department haven't adopted the approach as recommended by the review. Is there contrary voices within the department as to the approach in difference to what the review is or the report was suggesting?
I think what's important at the minute is that we take all the views together in the round, and what's important is taking on board what came in from the consultation responses and what's about to come in from the committee, and taking the committee's view and the general public's view all in together before we make a final decision. And as I say, the final decisions at this stage, there's no plans for mandatory forcing people to do anything. So, you know, that's...
Yeah, if adopted on the opt-out, I think there needs to be very clear rules of engagement for the consumer, that they understand their rights, and that's clearly communicated. Finally, from me, Chair,
yes, sir.
How much did the report cost the department?
The report itself, I can't remember, maybe.
The LCP Delta report?
Yes.
Oh, I think it was in the region of 125,000. Actually, 105.
105,000.
Yeah.
105,000. Okay,
105.
thank you.
Thank you, Jonathan. Okay, colleagues, we have no further questions at this stage. So, Sarah, once a policy decision has been made, then you'll inform the committee, is that right?
Yep, we'll send you a copy of the paper, and
And that'll be a ministerial decision? Okay, no problem. And what, you hope to present a decision paper to the Minister before recess? Okay, no problem at all. Thank you very much indeed.
Thank you.
Okay.
Summarising
Yes, sir.
So, Chair, is the committee then content to write to the department indicating that members welcome the technology insofar as it would provide benefits to consumers, or concerned about the importance of data protection measures, want to have very clear rules of engagement so that the consumers understand their rights, but also want to see access for vulnerable groups and indeed for vulnerable parts of the country where connectivity might be an issue, and that further the department has told us at page 263, I'm not sure if they've told us intentionally, they've actually told us what the cost is for an individual installation. So maybe to write to the department and just ask for the overall cost breakdown, because there's a big number of several hundred million. What we don't know is the marginal cost. So to explain, I got the meter changed in my house not very long ago. It was about a month ago actually. So that must have cost money. So I think what we'd be planning on doing is replacing meters anyway. So what they're going to do then, it sounds like, is replace them with a smart meter. So there'll be a difference between what it would have cost anyway and what the smart meter is, and that's the marginal cost. And that's the thing we don't know. So it might be interesting to find out what that is and to try and get them to break down that £300 or £400 million cost so we can understand where that's actually coming from. Additionally, members, then bear with me, if you look at page 274, there's this line which I don't understand. It's all about dispatch down, which is Mr. Honeyford's favourite subject, but what it says is that studies performed by Sony suggest that increasing demand in areas of high renewable energy penetration, such as the northwest of Northern Ireland, minimises network constraints, limits the need for network reinforcement, and increases the renewable energy output. Okay, so what they seem to be saying there is that the smart metering and all that good stuff will enable Northern Ireland electricity networks to manage the network better, so that where you have areas where there is a high penetration of renewable energy, this will allow them to manage that better, so there'll be less dispatch down. I think that's what that means.
So I was trying to ask, that's in principle, that's what I believe it means.
So the studies by Sony, so if the committee's content to write to Sony and ask them, is that what that means? Yeah. Because it is, I'm struggling to understand.
Can I just ask a question too? Did anybody pick up on it? The self-disconnect, that they will be able to identify those that are disconnecting, but they didn't talk about, any kind of. They mentioned it in the papers about the friendly credit and the emergency credit, and they kind of talked about. I think it was Italy. They talked about Italy giving credit, up to 2 weeks before people had to disconnect or something like that. Has that been considered in this overall package? It's, people are self-disconnecting because of affordability. So that, that's kind of the vulnerability part in there as well. And I'm just wondering if that is identified quickly, then what happens? I didn't really pick up just exactly what they were going to do there.
The committee's content to write to the department, seek clarity. If I've understood the papers correctly, I think what the technology would allow is for there to be remote disconnection, so that as it is, you don't pay your bill, someone would have to come around and disconnect you. But with the smart meter, what they can do is, this I think happened in GB, they convert you from the credit meter, which is what we all have, and put you on a prepayment, so that if you don't put any money on it, you're immediately disconnected. So that's what happened in GB. So I think this oversight group with the Consumer Council and other advice, they will talk about measures which will possibly be adopted in respect of what the member just said. So they did a particular thing in Italy where you get 2 weeks free electricity if you're in bothers. But I don't know what they're going to do. I think that's what the oversight group's going to do. But if I've understood correctly, I think that's what the technology permits.
Right, okay.
Sure. Just on one of the points that was raised about the GB rollout, so I think the officials were saying it was mandatory, but in the briefing paper it does suggest that there is an aspect of it that is still opt-out. as such, and while stocks are available. Be interesting just to get any background detail about how many people percentage-wise chose to opt out just for comparative figures to see was it a bigger issue than what perhaps maybe people feel it was. I don't know if it's available, but perhaps in the report it was. Yeah.
So opt-out figures in GB.
Yeah.
Okay, that's agreed, Chairperson.
Everybody content? Okay, thank you, colleagues. We'll then turn to item 7, which is Mr. Scholes from the Assembly Research Team. He's going to give us a very useful paper in relation to credit unions. Michael, thank you very much firstly for preparing the paper. It's very kind of you. So if you're content, I'll hand over to you.
Thank you, Chair. The paper really is a high-level overview of credit unions, and it presents current legislative and regulatory framework in Northern Ireland, the Republic and Great Britain. So I will give a brief overview of each section and then be able to take questions at the end. So on section 1 on page 304 of your pack, it sets out the basic rules for a credit union and lists the financial services that they typically provide. The important point is that credit unions are not-for-profit cooperative societies owned and run by the members. To become a member, individuals need to demonstrate that they satisfy a common bond, now, be it living in the same area or working in the same sector. And a key element is the savings account that is offered by credit unions, so by the purchase of shares, and the minimum initial shareholding is usually very small, typically £1 per share, but that can differ between credit unions. Now, as they're member-owned, any decision taken is based on how it would benefit the members, and that's unlike traditional banks where the decisions that we've made were basically around increasing profits for shareholders, for example. So table 1 on page 307 shows a list of services typically provided by credit unions in Great Britain and Northern Ireland and the Republic. And we can see that Northern Ireland credit unions offer quite a lot less services than the credit unions in the other jurisdictions. Credit unions in Northern Ireland can only offer a basic range of financial services such as share accounts, loans and life assurance. However, legislation in Great Britain and the Republic allows credit unions to offer current accounts, mortgages and insurance services. And also credit unions in Great Britain and the Republic can also lend to and borrow from other credit unions. This is not the case in Northern Ireland currently. Moving on to section 2 then on page 308, it describes the different legislation and regulatory regimes in Northern Ireland, Great Britain and the Republic of Ireland. And the key legislation in Great Britain is the Credit Unions Act of 1979. In Northern Ireland it's the Credit Unions Order 1985, and in the Republic it's the Credit Union Act of 1997. In Great Britain, recently, the Financial Services and Markets Act 2023 allows credit unions to offer extra services such as hire purchase agreements, conditional sale agreements, insurance services and loans to other credit unions. However, these provisions do not apply to Northern Ireland, and under the Northern Ireland Order, credit unions currently have a narrower scope to deliver financial services. So regulation of credit unions in Great Britain and Northern Ireland is undertaken by two bodies, the Financial Conduct Authority and the Bank of England's Prudential Regulation Authority. In the Republic, the Irish Central Bank is the regulator for credit unions. And in recent years, the Irish League of Credit Unions and the Ulster Federation of Credit Unions have campaigned for legislative reform and financial support for credit unions in Northern Ireland. And section 3 on page 312 outlines this case of reform. So basically the ILCU assert that there are certain operational disadvantages facing Northern Ireland credit unions, particularly with the provision of financial services. For example, the statutory interest rate on loans in Northern Ireland is capped at 1% per month, whereas in Great Britain it's 3%. And this means that credit unions here are restricted on the amount of income that they can generate compared to their counterparts in Great Britain. And as I've already mentioned, unlike credit unions in Great Britain and the Republic, Northern Ireland credit unions cannot lend to other credit unions, provide current accounts, provide mortgages, offer hire purchase agreements, and offer conditional sale agreements. In the Republic, credit unions do not pay corporation tax, whilst credit unions here have paid nearly 5 million in corporation tax last year. Also, there are business rates exemptions and reliefs available for credit unions in Great Britain, but not here. And another imbalance in support is the amount of direct financial support that's offered to credit unions in Great Britain, offered by Westminster. And I've listed these on table 3 on page 314 of your pack. So finally, the ILCU feel that credit union loans here should be exempt from individual voluntary arrangements, given the unique circumstances of credit unions and personal insolvency. So Chair, that's a very brief run through the paper, and I'm happy to take any questions that members may have.
No problem, Michael. Thank you very much indeed for that. In terms of the paper, it's very useful. I suppose, have you done any work just in terms of the prevalence of the credit union movement in Northern Ireland in comparison to other jurisdictions on these islands?
Yeah, well, credit unions in Northern Ireland are a lot more popular than they would be in Great Britain. A lot more popular. The membership is a lot higher. I don't have specific figures in front of me, but that is well documented that they are significantly better attended, and the membership's a lot higher here than in England, Scotland, and Wales.
In terms of the credit union reform that the department has indicated that they're going to go to consultation on later this year, in order for Northern Ireland to come into line with either the Republic or with mainland UK, do we have all the devolved competencies required?
Well, there's a bit yes and no. There's a bit of a wrinkle there,
yes.
Which obviously the department would be far better served to discuss than I will. But banking, for example, is a reserved matter. Yes. Credit unions are devolved. So that's one of the reasons why at the minute the current accounts and the mortgages, that banking services aren't allowed here. That's something that I would assume that the new legislation will address. How it's going to address that, I'm not really sure, but that's certainly one of the issues. Okay. That's really the main issue that under yeah.
That was my thought too. It's just I wasn't sure whether the department had the scope to legislate on all of the matters highlighted. Finally, you may not know the answer to this, Michael, but in terms of the direct support given in GB by central UK government departments to credit unions on the mainland, you're not aware of what, if any, the Barnett consequential of those may have been? Yeah,
well, I mean, I'm assuming that there would be a Barnett consequential, but obviously that's up to the executive and how they can spend it. So the credit union representatives didn't feel that was a direct benefit to them. Sure. So that's definitely an issue. I think they were definitely lobbying for more direct support for them specifically. But I wouldn't be aware of. But I would assume that there would be a Barnett consequential to that.
That's perfect. Thank you very much, Jonathan.
Yeah, just briefly, in the table of financial services offered, would you envisage that any potential legislation would be to put yes beside all those columns in Northern Ireland in line with the other two, or is there issues that certain specific financial services just wouldn't be possible?
Well, again, it's a bit of a grey area, but yes, I would assume that the legislation would try and at least tick yes in those boxes. But the current accounts and mortgages clearly are a banking service. So the Northern Ireland Act does prohibit banking in Northern Ireland, so it is a reserved matter. So that would be something. And again, I think though, and to broaden out your question, if you will allow me, the access to cash is an important one for credit unions. And if you think about the credit unions tend to serve financially excluded people, so the access to cash is a huge issue. The credit unions feel that they can do well, but they are restricted at the moment because they can't have ATMs, for example, and that would happen in Britain and in the Republic of ATMs, and debit cards and stuff that typically would be associated with banking, which may actually be outside the strict definition of banking that the department will try and get rounded by the legislation. I'm not sure, but you'd need to speak to them obviously about that. But one of the great things about the credit union is the availability of cash. You go in on a Friday night into your credit union, typically you need a loan. Somebody, the guy or person before you has already put £500 into the credit union in cash. You go in on a Friday night, you need a £500 loan. The cash is there, you can walk away with it. Now, that's just an example of how useful the access to cash is for people in Northern Ireland, and that's without the ATMs. So if we could imagine a world where credit unions in Northern Ireland have ATMs and those access, it would make the previously financially excluded people their life a lot better.
And you can particularly see how the credit unions do benefit those that don't typically have access to larger banking institutions. And you would imagine, given, I suppose probably given how, when you look at now at the traditional ATM, how that has changed over the years as well, particularly in local shops. You know, it's very much, it's not your traditional standardised banking version. Is there a barrier? You mentioned about the 3% interest compared to 1% interest in Northern Ireland. Is that legislatively mandated, or is that a decision taken by the credit union itself?
No, that's a statutory, maximum, and that would be the decision of the regulator. But that is in legislation, and that is one of the asks, I think, for the ILCU have asked that be up to 2%. So that obviously it's a higher rate of interest for the member, but also it generates income for the credit union. And don't forget, any income that's generated by the credit union is put back because they're not looking to increase profits. They're actually looking to increase the amount of loans that they can give to their members. So that's kind of a positive.
You know the percentage in the Republic of Ireland?
It's at the 1% as well.
So 1% Republic of Ireland, 1% Northern Ireland, 3% in GB. Thank you. Thanks, Chair.
Thank you very much. Sinead?
Yeah, I mean, I'm a great champion of the credit union. As I say, I'm a member of the credit union for a long time. But, you know, increasingly in our high streets, we're losing our banks. We have another announcement by Santander this morning. And for some people, the credit union is where they can access cash and money, and they're legitimate lenders as well. And I think, you know, there is a real fight on our hands because there's a lot of rogue lenders out there, and particularly in areas where there's high deprivation, they are playing really a vicious role in our communities, and we see increasingly that the credit union has to come in and play a role in that as well. Have you, in any of your research, have you seen that kind of societal role that credit unions play in their communities for the good? You know, can you see a difference, or have you been able to interrogate any of that data and about the role that they play in supporting people not getting into bad debts, so to speak?
Well, it is documented, but anecdotally, there wouldn't be any hard data available on that specific that I've come across for this particular paper. That's something I could definitely look at, but anecdotally, absolutely, you're 100% correct. I mean, the financially excluded from banks tend to go to credit unions because they don't want to go to loan sharks or whatever. And in the evidence given by the Irish League of Credit Union, that they would say as well that the loan sharks are the real problem in communities, in working class communities, where if the credit unions were able to expand their services, that would counteract that problem.
Like even the ATMs and that, it would be crucial that we, you know, allow credit unions to expand their portfolio of services to the communities in which they serve. So yeah, okay.
Diana?
Thank you very much for coming in this morning. Yes, I declare an interest as well as using the credit union, and, you know, really good experience of it. And I just want to ask the question, what is the limit on loans that the credit union can can provide. And when you think of a consumer going and borrowing or asking for a loan through the banks, it's a heavy, slow process. But the credit unions, they have, as I understand, a management board who approve loans. And how are they protected in their decision making? What regulations do they need to observe in terms of their judgment, in terms of safeguarding the credit union itself?
Absolutely. Well, the regulators, north and south, determine the maximum amount of loans per person. So, for corporate loans, they're limited. So, if there's a football club, GAA club, and it needs a loan, then that is capped by the regulator. A statutory cap is in place for 10% of the overall loan book. So, overall loans in the credit union will be 7 million. They can only lend to corporate members 10% of that, so it'll be 700,000. And that's one of the things that they're looking to change as well, because in a situation like that, that soon disappears if you have 3 or 4 clubs or 3 or 4 companies coming to you as a corporate member. In terms of individual members, how much you can borrow is limited. Again, by the regulator. In Northern Ireland, it's up to, I think, 15,000, because that's the maximum amount that you can actually save. In the south, there's a bigger scope. You can actually save up to €100,000 in credit unions in the south, and the limit on personal loans is up to something like, it depends on it's a percentage. It's capped at 39,000. For individual people, if there are certain conditions, but it is well regulated, the amount, not to expose the credit union to any debt, and the regulator oversees that process. So it'll be the central bank in the Republic, and it'll be the FCA and the Prudential Regulatory Authority in Northern Ireland. And the management board, what capabilities have they in making those decisions? The management board will meet typically once. Again, I'm not an expert in credit unions per se, but the management board will meet and will make decisions on individual loans if the loan is above, say, if you have a maximum amount of shares of 15,000, you've only got 2,000 in there, but you want to borrow 6 for a car. They will individually look at each of one of those on a case-by-case basis. Anything under the loans will be, anything under the deposits will be normally okay, no problem, they'll go ahead as long as the overall loan book will look at that. But they will then discuss that in terms of the overall exposure to the individual credit union, and they are bound by those maximum limits. What I'm really getting at ultimately is if their scope is widened, they take on more services, is there a need to build capacity for that management board making those decisions, or where does that rest? The operational decisions with ATMs, with further loans and services? Well, I guess they ultimately will be bound by the regulator, and the decisions that they make. There's a credit. The regulator, the FCA and the Prudential Regulatory Authority produce a rule book every so often, and the details of the regulations of the statutes are all in that, and a lot more detail is in that. So that's something that obviously that the credit union people could discuss with you in a bit more detail, assuming that you would want to speak to them about that. But that is all well documented at the moment.
Thank you, Michael. As always, your reports and presentations are very, very useful. So can I thank you very much on behalf of the committee for all your work on that. It might be useful, colleagues, for us just to seek an update from the department when they're hoping to launch the consultation on proposed legislative reform for the credit union. Obviously, the department had previously indicated in December that they'd hope to do that before the summer, but I'd be keen just to try and get a further update on that if members are content.
And further to the briefing, just want to ask Ray's just to come back with the credit union membership compared to GB, the Barnett consequential question, and just any information they have on the impact on financial inclusion of the role of the credit unions.
Members content?
Yeah.
Okay, we'll then move to item 8, members, which is insolvency and director disqualification, feedback on consultation. The committee will now receive evidence from departmental officials on the feedback to the consultation relating to proposed legislation. Colleagues, you are very welcome. Invite you forward.
Thank you very much.
No problem at all. You're very welcome. So we have Richard Mons, Director of Insolvency at the Department, and Jack Reid from the Insolvency team. Colleagues, you're very welcome and happy to hand over to you.
Okay, thank you very much. And thank you to the committee to give us this opportunity just to present the results of the consultation. My name is Richard Mons. I'm the Director of the Department's Insolvency Services. This is Jack Reid from our legislation unit. We attended the committee last year to provide the committee with briefing on plans to carry the policy consultation with a view to taking forward a bill to amend insolvency, director disqualification and partnership order legislation. We highlighted that insolvency is quite a specialist and technical area, and the responsibility for dealing with it falls broadly to the insolvency service and to specialist insolvency practitioners operating in the private sector. The main procedures available to deal with personal insolvency are individual voluntary arrangements, debt relief orders and bankruptcy. For corporate insolvency can be dealt with through corporate voluntary arrangements, administrative receivership and winding up by the High Court or by creditors. So the proposed bill will make changes to the main primary legislation governing the conduct of these matters in the Insolvency Northern Ireland Order 1989. There's also a piece of primary legislation to enable company directors to be disqualified for misconduct, which is the Company Directors Disqualification Order 2002. And provisions from both of these orders are included in the Partnerships Order, and there will be amendments proposed to the Partnerships Order as well. The amendments are reasonably low-key and technical in nature, and there's no one overarching theme. They've comprised a range of minor changes aimed at modernising and streamlining the insolvency procedures. There are 29 of them in total, so I don't propose in going through them in detail today. The information will have been provided to you previously in the consultation pack and in the briefing we provided. The consultation was carried out during the 8 weeks from 6th of November 2024 to the 1st of January 2025. It took the form of the issue of a letter to a region of 800 individuals and organisations, drawing their attention to the consultation document and associated impact assessments available on the Department's website. The consultation was also advertised in the Belfast Telegraph, the newsletter and the Irish News, and embargoed copies of the consultation were sent to your committee in advance of the consultation in October 2024. We hadn't expected there would be much, that the proposed amendments would result in much correspondence. A lot of the proposed changes have been made already to England and Wales legislation, so a lot of the practitioners operating in this jurisdiction were already aware of what was coming down the road for them. So we had 4 responses in total from the 800 we sent out. Chartered Accountants Ireland, Advice NI and the Insolvency Practitioners Association all agreed with the proposed amendments. Chartered Accountants Ireland commented that they were broadly in line with the ones already made in England and Wales, which appear to be working satisfactorily. Advice NI commented that the amendments would streamline processes, reduce costs and achieve parity with England and Wales. A response from the Law Society was also positive. The Society agreed that the legislation should be updated and it welcomed the removal of obligations such as requirements to have physical meetings. The Society did express concerns about one of the proposals, however. This proposal is that individuals made bankrupt on a creditor's petition should only be required to submit a statement of affairs if the official receiver asks for one. The law as it stands requires everyone made bankrupt on a creditor's petition to submit a statement of affairs unless the official receiver relieves them of that requirement to do so. The arguments put forward by the Law Society include that the proposed change would dilute the significance of statements of affairs and would place the official receiver under an additional burden. A statement of affairs is, in essence, a list of the bankrupt's assets and liabilities, and this information is needed to enable the trustee to take possession of the assets so these can be sold to raise money to pay the bankrupt's creditors and to enable the proceeds to be distributed to the creditors. However, alternative means are in place to allow the information to be obtained. Every bankrupt is required to complete a preliminary questionnaire which provides even more detailed information about their assets and liabilities than would be available from a statement of affairs. This will include information about their income, which will allow a determination to be made if the bankrupt can make a contribution from their income to their creditors. In the vast majority of cases, to have requirements to set out the same information in a separate statement of affairs amounts to nothing more than a pointless duplication. So therefore the information that we already request in the questionnaire is already covered in the statement of affairs. So it is true that a statement of affairs has to be verified by sworn affidavit, and that making a false statement on oath is an offence under the Perjury Order 1979. However, to provide false information in the preliminary questionnaire as well would also be an offence under the 79 Order, and the bankrupt's attention is drawn to this through the relevant provision in the order being included in the questionnaire. The bankrupt is asked to sign to confirm that they have read and understood the provision. It is a fact that of a total of 149 people made bankrupt on a creditor's petition during 23-24, not one was required to provide a statement of affairs. So this demonstrates in reality that a statement of affairs is rarely used or rarely requested, and that the trustee, the official receiver, will be happy with whatever information is provided in the questionnaire. It is our case that, far from diluting the significance of a statement of affairs, removal of requirement for one to be submitted in every case, whether it is needed or not, would enhance the significance of the document in those cases where it is genuinely needed and can add value to the conduct of the case. Action by the official receiver would only be required in the tiny minority of cases in which a statement of affairs would be of genuine value, and that action would be to request the production of a statement of affairs in accordance with a procedure which would be laid out in insolvency rules. And to address an additional concern raised by the Law Society, there will be the same sanction available for non-compliance as exists under the current legislation, and that failure to comply with request to submit a statement of affairs will be liable to be treated as contempt of court. Now, the Minister has asked us just to follow up on this matter with the Law Society, so we're seeking clarification from them, so just to try and understand the basis on which they're responding to the consultation on that. So we'll be responding to the Minister in due course on that. So really that's all I have to say on the matter. Just finally, I would mention that we're aiming to be in a position to introduce our bill prior to the summer recess. We know that by doing so it will help to reduce pressure on the Assembly's time during the closing years of the current mandate.
Richard, thank you very much. So once you have further engagement with the Law Society, then you'll begin the drafting process, or has a drafting process already begun with those other issues, and then see what the outcome is with the Law Society?
Yeah, the drafting, the bill is pretty much drafted,
right,
and ready to go. So we've been spending the time on that. So we have looked at the consultation. So this is really the only matter outstanding now, which is we want to get behind to understand what the Law Society is, what their concerns are, because it's in practice. The official receiver asked for this questionnaire to be completed. It's done online, and it's more adaptable and flexible. For instance, like the PPI the scandal there was a few years ago, it was able to adapt to include things like that, whereas the statement of affairs is set down physically in legislation. So therefore, if you were to change that, you'd have to make a legislative change to that, and say the bankrupt is under the perjury order as well when he or she completes that questionnaire. So they are bound by that as well. So the official receiver in the vast majority of cases is content with the questionnaire, and that's enough information for him or her to complete their investigations.
And just lastly for me, given its non-controversial nature, do you think the Department will be seeking accelerated passage of the bill?
We hadn't thought about that, and certainly it hadn't been proposed that we should be seeking accelerated acceleration of the bill through the Assembly, but it's certainly something we can look at. I mean, it is technical and complex in nature, but relatively completely uncontroversial. All in this, one matter's been identified. As you know, we had sent out 800 individuals and organisations, and what we're proposing is already in place in England and Wales. So most of the practitioners know what's going on. So it's certainly something we could look at if that would be appropriate. We can certainly liaise with our Assembly folks back in the department.
Jonathan?
Yeah, so just briefly, it says it's modelled on similar schemes to England and Wales. Is the way in which the creditors are ranked identical as England and Wales?
They would be, yes.
Identical?
Okay. That's our legislation would be very much modelled on the England and Wales approach. So these changes would replicate changes that have been made in those systems as well.
Thank you, Jonathan. Okay, thank you. We have no further questions.
Okay.
Thank you both, gentlemen,
Thanks very much for your time,
your work on this. Appreciate it.
So we
could write to the department and indicate generally that we're happy with the transfer feedback on the from the society. Could also indicate something about that's what the duties are.
Okay, members, are we content that we write to the department to say that we're relatively content with the proposals at this stage, and that we're just keen, whenever they've concluded their engagement with the Law Society, that they keep us abreast, and any developments in relation to accelerated passage? Are members content?
Yeah, that's it. Thanks, Chairperson. Very good.
Okay, item 10 then, correspondence, members.
It's 9 actually. It's the
right.
delegate legislation. Sorry. Nearly there.
Item 9, delegated legislation, employment rights, page 501. The Department proposes to lay a statutory rule entitled the Employment Rights Increase of Limits Order Northern Ireland 2025. This rule is not subject to any procedure in the Assembly and will likely come into operation on the 6th of April 2025. The proposed rule revises the limits on awards and payments under certain employment rights legislation in line with Retail Price Index. This includes provisions concerning the limit of a week's pay used in the calculation of statutory redundancy payments, the basic award of compensation made by an industrial tribunal for unfair dismissal, the limit on guaranteed payments when workers are not provided with work, and the basic award for unfair dismissal in health and safety cases. Members have anything they wish to raise on this? Okay, if not, is the committee content to write to the department to say we are content with the proposed rule? Agreed. Item 10 then, correspondence, members, which begin at page 507. Item 2 at page 551. Members are asked to note an update on the enhanced investment zone from the department. Members content to note? Sinead.
Just to comment on that
Yes.
as well. I don't know. I just think that it's not an awful lot of money, and just from that statement by the Minister, it seems to be, going to cover a lot of ground and a lot of areas. And I'm just thinking it's like slicing the cake into so many pieces that nobody really gets a bite of it and nobody feels satisfied at the end of it. This is completely different from what we thought it was going to be. And yet, I don't know, maybe I've missed something, but this is the first I've kind of heard that it's been rolled into the free ports, and it's about advanced manufacturing now, and there's an awful lot of areas that a small amount of money is going to cover, and I'm just wondering, is it going to have really any significant impact at all? Obviously, Invest NI are going to now start engaging in a 6-month engagement process with a lot of organisations throughout Northern Ireland to see how they can become engaged in it. But, I think we need to know more information on that. It's fine to be in correspondence, but it is significant, and we've talked about it a lot since we came back here. And now this is kind of like a completely new grenade.
I was hugely surprised as well, Sinead. So my maybe misconception was that this was going to be all focused on green energy.
Yeah.
And that's just what
it's advanced manufacturing now, and it's everything.
Yeah. So if members are content, we could request that the department come and give us an updated brief in relation to that. I think it's welcome, first of all, to say that there's progress being made on this fund, and I think that's important. But I think the committee is just keen to understand now if there has been a change of thinking by the department, what that is, and how the committee can be involved in doing that.
I just would fear that it's going to be, just consumed by the city deals, kind of eking out money here, there and everywhere where there is gaps in funding, and it becomes lost in its intention.
Intent?
Yeah, absolutely.
So we seek a briefing from the department membership. Okay. Item 3, members are asked to note a ministerial response on FTC in relation to the social enterprise loan scheme. We'll ask the department to keep us abreast of that, Peter. Are members content?
Yep.
Okay. Item 4, members are asked to note a departmental response indicating that the childcare market research is to be completed by the end of this month. Are committee content to note at this stage? Item 5, members are asked to note departmental response in respect of employment research, including the QUB research into gender gap employment, and the DFE has commissioned further research on this issue. Members content to note? Thank you. Item 6, members are asked to note an update on the review of public bodies commissioned in the last mandate. Members content to note?
Yep.
Thank you, Peter. Did you want to cover something?
The
educator, do it later.
We'll do it.
Yep, okay. Item 7, members are asked to note the ICS review of Northern Ireland Screen. Again, members content to note. And then at item 8, members are asked to note TEO response on the Northwest Development Fund, which runs out at the end of this month. TEO have indicated they're engaging with the government in the Republic of Ireland in respect of future funding. Sinead.
Okay. Again, I just didn't think it was an answer. There's no answer. They haven't match funded, but they haven't said why. So I don't know. Do we write to the Minister for the Economy and ask, has she requested that this match funding be made? Because it just purely told us what we already knew, that they haven't matched it.
Anything?
No.
Okay.
Happy with that.
Great, Chairperson.
Members content? Okay. Item 9, members are asked to note correspondence from the Communities Committee sent to DFE on contracts, grants and the Procurement Act. Members content to note? Yep. Item 10, members are asked to note a copy of correspondence from the Communities Committee, again in relation to EDRF funding. Content to note? Thank you. Item 11, members are asked to note a commissioning note forwarded by the Department for Finance indicating that DOF has asked all departments to provide final budget information by the 13th of March. Is the committee content to write again to the department seeking sight of the initial impact assessments for budget 25-26? Right. Item 12, members are asked to note a link to the Northern Ireland Fiscal Council report. Content to note? Okay. Item 13, members are asked to note confirmation that there'll be a concurrent meeting with the ERA committee. Are members content with that? Thank you. Item 14 at page 842, members are asked to note correspondence from the PAC indicating that it is to retain primacy in respect of the FE disclaimed annual accounts for 23-24.
Is there an interest in the PAC?
Yes.
Chair, can I just do interest on that? Just member of the PAC as well.
Perfect. Okay. We note at this stage then, members?
Yeah.
Okay. Item 15, members are asked to note correspondence from the PAC in respect of the current status of the Northern Ireland Audit Office report being scrutinised by the committee. Note that they is unlikely to conclude before the summer recess, so members can tend to note at this stage. Need to hurry up, David, and do some work on that committee.
The busiest second busiest.
Item 16 on page 848, members are asked to note a copy of a letter from the Minister at the Department for Business and Trade in respect of product regulation and metrology and the interaction with the Windsor Framework. Members content to note? Thank you. Item 17, members are asked to note a copy of a letter to the Secretary of State for Northern Ireland in respect of ongoing transactional introduction of the EU's carbon border adjustment mechanism and its potential implications for Northern Ireland. Members content to note? Thank you. Item 18, members are asked to consider a request to brief from Renewables Northern Ireland in respect of the consequences of delay to the delivery of the Northwest Interconnector and regarding distributed generation support for 1 to 5 megawatt renewables. The committee can... David? No, I was just going to say the committee may wish to hear initially from the department if they've given the renewable NI an update, but David?
It'd be worth definitely having that. The support scheme, first of all, North-South Indicator Connector is absolutely vital, but on the support scheme, to have a different support here than the South will drive investment south and not here when we're in one energy market. It's crazy, absolutely nuts, but it's the commitment from the Minister. If it's not happening, then the next rollout that it definitely will, because a lot of this takes years in planning permission just to even get through. So we definitely, if we can speak to the department, bring the department in, it'd be absolutely brilliant.
Members content?
Okay. Do that now, okay.
Yep. We just need to consider item 19 in closed session if members are content.
Okay. Oh, sorry, we weren't going to go to closed yet, so if we could do the forward work programme.
Oh, you don't want to go? Oh, sorry.
Sorry, Chairperson. I'll leave it in brief.
Yeah, no apologies, sorry. Forward work programme, Peter?
Actually, there's not much to say this week. We've got through an awful lot here. Utility regulator next week. and Game of Thrones on 2nd of April.
Yep.
And hopefully I think the department are going to come along and talk about offshore renewable energy action plan at that point, so that might be interesting. And again, hopefully the Minister on the 9th of April, and student loan stuff as well on that day. So if members are on to that.
Yes, Chair, thank you. Just wanted to ask, would it be possible, would members agree to an overview briefing of all the renewables that are available, because it's a big piece of work we're doing. I'm a fairly recent member of the committee, and catch up really, that we're all briefed, and I'm sure new members would appreciate that too. I hope.
Yeah.
And older members too. No, it'd just be useful to get a complete overview of all the different schemes, support mechanisms that are currently in place, the policy development that is in place, and the gaps that are currently in place as well.
And also, I think probably basic explainers to some of them, because some of them are quite complex in what their design is and what their potential benefit is.
And the scheme, common scheme,
yes.
We're not getting.
So we do that.
Okay, so I'll talk to Assembly Research first. It sounds like I think we may need an expert, and if you remember when the Minister's critical friend came, I thought he was quite good. I thought members got quite a lot out of him, but maybe somebody like that, not him, but someone like that who could, an expert who, not necessarily Assembly Research, would come along and speak to members about that and give you this overview. Now, I'm really glad you're doing this, because it's fiendishly complicated. Hopefully the utility regulator next week will help you with RP7, but no, this is complicated. So yeah, good idea to unpack it.
If we ask this library service to do a briefing document with a breakdown of each individual renewable, basic explainers, what its policy intent is, it would be useful for members to have, particularly going forward.
Yes, absolutely. I'll do that, and I'll also ask them to identify somebody who might be able to come along and give you a more. It's always handier when somebody explains it, particularly if they are an expert. No problem. We'll do. Very good idea, members, if I may say so.
Okay. Is there any other business, members? If not, then the next meeting is next week, the 26th of March at 10 a.m. here in Parliament Buildings, and the committee will now move into closed session. Are members content? Perfect.
Members.
Committee Room 30. Sound. 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 Committee Room 30, 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 sound. Committee Room 30. 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 Sound. Committee Room 30, 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 sound. Committee Room 30. Sound. Committee Room 30. Sound. Committee Room 30. Sound.